Dean Barr, thank you so much for joining us. Give us your sense now of Dodd-Frank, how it's held up, and particularly how it's holding up in the middle of a COVID-19 crisis, something no one could have anticipated.
Well, I think that's right. We don't really know exactly how the future risks are going to play out. We certainly didn't anticipate 10 years ago that there would be a global pandemic today. But the framework that was put in place in Dodd-Frank, I think, has been quite resilient. It established a much safer system, a fairer system than we had before. But I want to say that, our financial system is not really safe enough or fair enough yet. And there are more risks to come in the financial system. I think we still need to work on a financial system that works better for households and businesses, and we're not there yet. I think that on the positive side, go ahead.
No, please, you go ahead.
I think on the positive side, there's a lot more capital in the system, so there are bigger buffers in the system in the event of failure, and that makes the financial system more resilient. You've seen the major financial institutions and community banks able to lend in this economy to businesses and households, which is so critical to us in this period. And I think that the issue is, are we going to have the resilience we need to make it all the way through the crisis? And there, I think there's some uncertainty that was revealed in the last round of stress tests.
Well, let's talk about the stress test. That's exactly where I wanted to go, because I think everyone pretty much agrees the banks are so much stronger and healthier than they were back in 2008. Good on you. That's terrific. At the same time, are they tough enough, the stress test? One of the ways that we're trying to implement Dodd-Frank, and does it really contemplate the possibility of an L kind of shaped recovery rather than a U or a V?
I think that's exactly the right question. Look, in my view, in the last few years, I think that the Trump administration appointees have really lightened up in ways that I think were inappropriate, both on the stress tests on an aspect of capital and liquidity rules. And so the stress tests were not strong enough coming into COVID-19. Obviously, the COVID-19 situation just completely upended any of the models that were in those tests. And so the Fed included a component of looking at the particular effects of this crisis. And as you suggest, they mostly focused on a V path or a W path of recovery and didn't really get to an even worse case scenario, an L path, where we just stay at a low level of growth for an extended period of time. And my own view is it would have been smart to do that. I think the other problem with the stress test is that they did not release individual results about those COVID scenarios. And the thing that is reassuring to the market and helpful to the public is to actually have data on particular institutions. That's why the 2009 stress tests in the midst of the financial crisis, I think, were successful at calming the market because they were transparent. And there's really a lack of transparency here. I think the other issue coming out of the stress test is that although the Fed, coming out of the stress test, agreed to block share buybacks, they're letting the largest financial institutions continue to pay out dividends, which is depleting capital at a time when we need them to be conserving capital or perhaps, I would argue, raising more capital.
One of the issues that popped up right at the beginning of this crisis was the problem with the short-term funding markets, things like repos and money market funds. Did the system hold up adequately there? On the one hand, the Fed stepped in and sort of fixed the problem. On the other hand, the Financial Stability Oversight Council, did it really, FSOC, do the job that you hoped it would do, or did it fall down a little bit on the job?
I think that a critical issue has been the lack of serious reform of money market funds. Coming out of the financial crisis, we didn't include that in Dodd-Frank because the SEC had the authority to undertake the necessary reforms. And eventually the SEC took some steps, but those were not steps that were serious enough to deal with the extent of problems in money market funds. And I think you saw that right at the very beginning of this crisis. Treasury and the Fed stepped in right away to provide support for that sector. I think similarly, the disruption you saw in March of this year largely arose because of highly leveraged hedge fund activity in the Treasury markets. And the lack of FSOC attention to hedge fund issues, I think, is a serious mistake. So I think there's a lot more work to do. As I said, the Dodd-Frank Act itself is not perfect, but I think the framework is resilient. What we need are regulators and institutions that are, up to the task of keeping us safe.
Yeah, Dean Barr, you mentioned the fact that we need actually, if anything, more protection. We had a constitutional challenge to the CFPB, which was an integral part of the protection for consumers here. It was rebuffed, although they said the president could fire the head of the CFPB. Is that a robust enough institution at this point to do the job that you anticipated it should do?
Yes, I think the CFPB, the Consumer Bureau, is quite strong. Even after the Supreme Court ruling, it maintains independent funding, independent rule writing, and supervision. There are a wonderful group of career staff in that agency who are looking out for households. You have kind of a crowdsourcing mechanism there where the public weighs in through the consumer complaint database that's public. You have state attorneys general able to enforce federal law. So I think the basic framework is there. I think what we've seen in the last few years, though, is that, again, the Trump administration appointees have rolled back a number of protections, for example, on payday lending, enforced arbitration clauses. They've weakened enforcement. And I think that needs to be reversed. And particularly right now in the COVID crisis, we've got millions of people who are potentially exposed to abuse. We need an agency that's looking out for them right now.